another Zoom meeting on a Wednesday evening, so I appreciate you taking some time to be here, and hopefully this will be informative and maybe a little entertaining. I am going to share my screen here, if you give me a second, and pull up my PowerPoint. Is that visible to everybody now?
Yes.
The opening page there?
Perfect.
All right, great. So again, I appreciate everybody being here. I'm gonna go through a few things here, a few slides. We are gonna have Q&A at the end. If you have questions throughout the conversation tonight, you can put them in the chat. Jeanette's gonna monitor that. And I believe we're gonna have a couple of trivia questions at the end with some fun prizes, I believe. So stick around for that. Real estate. It occupies an outsized place in our lives here in the Bay Area. It is a common topic in the media. It dominates a lot of our conversations. It's certainly, for most of us, it dominates our finances. Yet for all this focus, there's still a lot of misperceptions and myths that persist around our Bay Area real estate markets. And a lot of these have really been exacerbated by the pandemic. So I'm gonna try and bust some of those myths that I commonly hear. And what I'm gonna address here tonight is what you see here, that the Bay Area is being depopulated, that remote work is gonna be so ubiquitous, it's gonna make living in the Bay Area relevant. Because of the economic problems due to the pandemic, we're going to have a wave of foreclosures coming like 2008, and all of this is going to lead to an inevitable, significant correction in the real estate market. So I'm going to sort of go into each one of these myths in a little bit of detail. And I am not advancing here. Let me see. There we go. Before I jump into the myths, though, I want to just take a second and talk about how has the market performed since the pandemic hit, and really what's behind it. So if you look at this chart on the left, essentially what this is the bar chart is unit sales in the Bay Area. And I should say, when I'm talking about tonight the Bay Area, I'm talking about 5 core counties: San Francisco, San Mateo, Santa Clara in the Peninsula, and Alameda and Contra Costa in the East Bay. Real estate is a hyper-local business. Things can be different from town to town, from neighborhood to neighborhood. For the most part, all the trends that I'm talking about tonight really apply consistently throughout the Bay Area, with one caveat that I'm going to address, which is the city itself of San Francisco. But if we look at this, what we see is that when the pandemic hit last March, or when shelter in place hit, everything stopped, right? Just activity fell off a cliff. Back in March, and you see that with the line dropping in March, April, May. And I was sort of, after 20 some years in the real estate industry, wondering what I was going to do for my next career, because I thought I was going to be out of a job. It really didn't last very long. It took about 3 weeks for things to turn around, and all of a sudden we just had this rebound that never stopped for the rest of the year. And in fact, we got to the end of 2020 with virtually the same, even a little bit more sales, even just in terms of units, total houses sold, than we did in pre-pandemic in 2019. And definitely more in terms of dollar volume, just because of price appreciation. Now, what's behind that? And it's really a few things. The disparate impact of the pandemic, very low interest rates, the relationship we have with our homes has changed completely, and then low inventory, sort of working on the pricing side. And I'm going to talk about each one of these. Disparate impact. Unfortunately, when the pandemic hit, the economic downside of the pandemic disproportionately hit lower income households the hardest. And you can see this in the unemployment numbers, and this doesn't even tell the whole story, right? I mean, the leisure and hospitality workers, retail trade workers, things like that, all those people were hit the hardest with unemployment or underemployment, wage loss. And unfortunately, those are also the segments that, because of the high cost of real estate in the Bay Area, were for the most part not driving Bay Area real estate to begin with. The higher income segments, which do drive Bay Area real estate, tech, biotech, healthcare, medical tech, and finance, have done very well through this pandemic and have continued to buy homes at very, very high rates. So that's, it's unfortunate that's the case. It is the reality, and that's one of the reasons why we're seeing a very robust real estate market through this pandemic. The other, of course, is historically low mortgage rates. We ended 2020, as you see here, like 2.75% for a mortgage rate. Rates have actually gone up a little bit in the last couple of weeks, about 25 to 50 basis points. We're looking at 3 to 3.25% right now. A lot of people are like, oh my God, rates have spiked, this is terrible. The reality, if you put this in historic context, we are still looking at some of the lowest rates we've seen in modern history in terms of mortgages. And when rates are around 3.25%, 3.5%, it is going to slow down the refinances a lot. I don't think it's going to have any impact on real estate sales. Probably not until we hit 5+%, to be honest, is it really going to make a difference. And when you look at the cost of money, if you can get a 30-year mortgage at 3%, right, fixed for 30 years, inflation runs maybe 2% a year, and we still get a mortgage interest deduction on, I think it's $750,000. I like to say that the cost of that money we're borrowing is essentially free. So this has brought a lot of people into the market, able to buy that maybe weren't before, and it's also pushed a lot of people to buy more expensive houses or bigger houses than they might otherwise would have. Now, I want to touch very quickly on, I mentioned San Francisco itself as a bit of an outlier. And what we're looking at here is absorption. It's a very common metric in real estate. And essentially all it is the total number of homes that are available for sale in any given period of time, a month. What percentage of those were sold during that period of time, were absorbed during that period of time. So it's a measure of momentum and balance in the market. And that's the blue line in these charts. On the left, it's the 4 suburban counties, right? San Mateo, Santa Clara, Alameda, and Contra Costa without San Francisco. And you see the dip in, March, April that was due to the pandemic, where inventory spiked and sales stopped. But it was quickly absorbed. And we actually ended the year at close to 100% absorption. So almost everything that was available for sale in December was sold. San Francisco on the right shows a very, very different picture. The gray bars are the amount of inventory available. The black bars are what was sold. And then the blue line, obviously, the absorption. Way more properties coming onto the market in San Francisco than being sold. High density living, or urban living in a high density environment, and where you have no access essentially to all the amenities and benefits of living in a dynamic urban environment like San Francisco, is singularly unappealing in a pandemic. So it affected San Francisco in a way that it really didn't affect pretty much any other place in the Bay Area. The one thing that I will point out is it really is high density living that was the problem. Even in the suburbs, I can tell you, like down here in the peninsula where we have high density housing, if it's a high rise or something like that, very, very difficult to sell, prices down, not selling well. You just don't really see it reflected in the data because it's a small part of our housing stock, where in San Francisco, the entire city is very high density. We have seen a bit of an improvement in the last couple of months. You see it a bit at the end of the year there. And sales have picked up quite a bit in San Francisco, competition, multiple offers. We'll see how long it takes to really turn around. I would give it 2 years, and San Francisco will be, right back where it started. It will be fine, but there's going to be a period of adjustment for the city. Another major trend is that our relationship with our homes has really been altered by the pandemic. And what this means is that, a common part of human existence is that catastrophe creates movement. And what's happened here is, if you think about how we lived in our homes, we go to work, We'd come home in the evening, have dinner, maybe hang out a little bit, go to bed and sleep all night, and get up in the morning and leave and do it again. We actually, for the most part, didn't demand that much from our homes. Now our homes are, there are office, there are schoolrooms, there are dining experiences, our fitness centers, our entertainment and recreation venues. What we need from our homes is completely different. And if you, these images that I have here are kind of allegorical, right? We've had this nice house on the left, our nice suburban house that our nice craftsman that we lived in, and it was perfectly fine. And now all of a sudden, it's starting to feel like this, you know, rundown one-room shack in the woods, because it's just not meeting our needs anymore. And what I'd like to do is I'm going to talk about some of the trends that we're seeing in home buying and what people are looking for, and show you some data behind it. While I talk about that, what I would like to do here, give me 1 second. I would like to know what kind of an experience all of you have had. So I'm going to launch a poll here, and is it up? Is the poll up? So it'd be great if you guys could take a minute while I go on to the next slide and just kind of, you know, tell us what your experience has been with this, and then we'll look at the results in a second. So what are we seeing in this shift in demand and the shift in relationship? The biggest thing that we're seeing in terms of people buying homes is more space and more rooms. In the past, everybody wanted the big open floor plan, right? That was a big selling point. The open kitchen with the family room, the great room. It's where we bring everybody together. The pandemic has brought us all together a little bit too much, and now people want privacy. People need privacy for their office to work. They need the Zoom rooms, or they just want to get away to do yoga or whatever it is. So we're seeing people looking for more rooms, for more flexible space, things like that, for, you know, dedicated workspace, better infrastructure, the Zoom room, because we all do this all the time. It's just becoming a common part of our lives. And this is really driving the demand of what people are looking for. Healthy living is a trend. That's actually a trend that's a nascent trend for some time now, but it's really been boosted by the pandemic. You know, air quality is a big thing. Surfaces, of course, huge now. We're starting to see a lot of these, you know, germicidal surfaces sort of come to market. People want things like that. But I would say overall, the number one thing that people are looking for, even more than more rooms, is outdoor space. Everybody I talk to and all of my colleagues, you can read lots of articles about this. People are looking for outdoor space for, you know, whatever it is you want to do. It can be gardening, it can be, you know, fitness, recreation, socializing, right? We want to do that safe distance socializing, but everybody's very isolated, and we want to see our friends again. And so having outdoor space kind of allows us to do that. That's just been a huge driver of people looking for space, and driving a lot of people out of the city looking for, you know, homes with yards and things like that. I'm going to show you a little bit of data supporting this. Before I do, if everybody's had a chance, I'm going to end this poll and see if we can take a look at the results. Does everybody see the results here? Are they up?
They're up.
Okay, super. Yeah, so this is interesting. So 32% of the people say they're fine in their home, but 68% of the people think, yeah, it could be better, or they definitely need an upgrade. When you think about that, that's huge. If you extrapolate that to the, you know, the population of the Bay Area, really the country as a whole, that's a lot of people either on the move or thinking about moving. And probably, you know, this small sample is probably very reflective of what's driving a lot of the demand in the market today. So let me close that one out, and let's see. So just real quickly, talking about the shift, what we're looking at here is, on the left, the unit sales growth in different price points. On the left, it's between 2018 and 2019, and on the right, it's the exact same data from 2019 to 2020 during the pandemic. And what we see is just a marked shift to higher price point homes. And yeah, I mean, some of it is maybe, you know, prices are going up, but that doesn't begin to explain this kind of a stark shift. People are, there's more people willing to spend more money for bigger homes and more spaces, and more people with money who I think are deciding that it's time for them to move to a bigger space, a bigger home, bigger yard, things like that. The other place we see this reflected is here when we look at room counts. And this is the unit sales between 2019 and 2020, the change by bedroom count. So one bedroom, this is just single family homes, by the way. For this particular slide, I excluded condominiums and townhomes. And you really don't have a lot of one bedroom single family homes. So that data point doesn't really mean a lot. But if you look at this shift, people want that extra bedroom. They're not having more kids. They're not suddenly more kids in the family, but they need the office, they need the schoolroom, they need the yoga room, they need those things. So people are shifting to higher bedroom counts. I do want to point out, this is a change, right? This chart shows change. There are still tens of thousands of 2 and 3 bedroom homes being sold because that's a huge part of our housing stock. It's just that the shift, there's just a bigger demand for more bedrooms, more space.
Hey, Rob, we've got a question in the chat.
Sure.
Do we know if the people buying more homes that are higher cost / more spacious are longtime residents from the Bay Area, or are they people who just recently moved to the Bay Area? That's from Alma.
That's a great question. The short answer is no, I don't have data on that. I am, in a couple of minutes, I'm going to show you some data on migration patterns, which I think will answer that question, because for the most part, there's more people leaving the area than coming in. So I think that's primarily internal migration as opposed to immigration from outside the area. But it's a great question. And it's the first one I'm going to address as we enter our myth-busting section here. So the myths that I want to address here, again, people are fleeing the Bay Area in large numbers. This is the migration thing we just talked about. Foreclosures are coming due to unemployment. Remote work is going to be the norm, so people aren't going to live here anymore. And then the inventory shortage driving up housing prices. And in fairness, this last one is less of a myth and more of a really let's understand what's behind it, because I think there's a misconception there. But to your question, let's look at some of the migration patterns here. And this is, look, we all know somebody that's left, right? Every one of us, I'm sure, knows somebody that's in the last year moved to Seattle or Denver or Austin or Boise, I don't know where. And so it feels like everybody's leaving, and that's what everybody's talking about. But if you look at the actual data, it doesn't really reflect that. So on the left, what we're looking at is net migration, net out migration from the Bay Area. And the top bars are San Francisco itself. The gray is 2019, the black is 2020. And what you see is in that year, almost a 300% increase in the people leaving San Francisco. No question that's huge. And it also goes back to what we looked at on that absorption chart with how it's impacting the real estate market in San Francisco. But where are those people going? And if you look at the pie chart, this is the destination of people leaving San Francisco. 85% of those people are staying here in the Bay Area. Almost 50% are just going to Alameda and San Mateo counties alone. In other words, they're not leaving the area, they're just getting out of the city. They're looking for more space, they're looking for bigger homes, they're getting out of higher density urban areas. And then again, Marin, Contra Costa, Santa Clara, Sonoma, 85% of those people staying right here in the Bay Area. Yeah, people are leaving. Personally, I think a number of people that have left are going to be coming back. But for now, even if they don't, I think of it like this. You've got a bucket filled with water, and that water is overflowing onto the sidewalk. And you're worried that that water that's overflowing onto the sidewalk is going to result in an empty bucket. It's not. There's some water falling out of the bucket, but that bucket is still full. And this is a trend that would have to accelerate and continue for many, many, many years, I think, to have any material impact on the supply-demand equation here in the Bay Area. The other thing that's interesting about this is, and this, unfortunately, there hasn't been any studies on this specifically, but if we go back to the disparate impact issue, I suspect that of the net out migration from the Bay Area overall, it's it's probably heavily indexed, again, towards lower income households, people that lost their jobs or lost hours. And this is a high cost area of living, and they just couldn't afford to live here anymore, so they've gone to other less expensive areas. Foreign immigration has also had another big impact on these sort of demographic changes. Foreign immigration has actually been dropping for about 4 years. And it started in around 2017. We had a different political environment that was not so friendly to immigration, and it started to drop. And then when the pandemic hit, all bets are off. Foreign immigration really just stopped completely. Is it going to come back? I think it's going to come back pretty strongly. Once the pandemic is behind us, we've got a different political environment. It might not ever make it back to this level that it was pre-2016, but I suspect it's going to come back and be a significant part of the dynamic here. So the next thing is foreclosures. Hear a lot about this. Since the pandemic hit, 6.5 million mortgages have gone into forbearance. Now, this is a national statistic. A forbearance is basically a program that the lending industry created, the servicers created, to avoid a 2008 style debacle, where basically people that had economic problems could defer making their mortgage payments or make partial payments for some period of time. What it did not do is excuse them from making those payments. So at some point or another, they're going to have to make up whatever payments were deferred, whatever interest was deferred. Whatever interest was deferred. So because of that, there's this fear that, there's going to be this big ball of debt that people aren't going to be able to pay, and it's going to result in a lot of foreclosures. The chart on the left actually shows us that that's not the case. The majority of people that have gone into forbearance, these 6.5 million mortgages, 55% of them have left the forbearance program, and by either paying off the debt, probably selling the house, or they're current on their payments. So they're fine. They got rid of the mortgage completely, or they're back and they're current making their mortgage payments. Most of the rest are in compliance with the forbearance program, still to this day. It's a very small percentage, about 2%, that are out of forbearance and actually delinquent or in default on their mortgages. But if you look at the chart on the right, and this is what's really important here, is that of all the forbearances that are past due, 90% of them have at least 10% equity in their homes. Now, why is this important? It's important because you don't foreclose on equity. If you're in economic trouble and you can't pay your mortgage, but you have equity in your house, you're going to sell your house and pay off the mortgage. And yeah, it's going to suck. You still feel like you're losing your home because maybe you lost your job and now you lost your home. But what you didn't do is get foreclosed on. And if you had, 15 or 20 or 25% equity, you sold your house and you walked away with some cash in your pocket. We've got more than enough demand in our market for, whatever potential small increase in home sales might result of this to easily be absorbed in the market without affecting, the supply and demand curve at all. So I see really absolutely no risk whatsoever of any sort of foreclosure wave having an effect on the market. Remote work. Now this one we could all argue about, and we probably will. And the reality is nobody knows when this pandemic is all said and done and in our rearview mirror, nobody knows exactly what this is going to look like. There's been a ton of surveys over the past year, a lot of studies done, and some of these numbers that I'm showing here, I've been watching some of these surveys over the course of the year, and these numbers have been changing as time moves on and they redo the surveys with the same people because everybody's getting a different picture of how this is working and how it's not working. And so there's no one clear picture of what this is going to look like. What I think everybody does agree with is that remote work will be a component of our future employment picture. And there seems to be a fairly strong consensus that it will be, for most people, it will be 1 to 3 days a week where you have the option to work remotely or work from home. And but I've not heard anybody anybody say with any certainty that a material number of people are going to be working 100% remote. And you talk to companies, you talk to management, HR, and I've seen all the surveys, and nobody says that, because the reality is that's not a tenable environment for most companies. And if it's 1 to 3 days a week, that means 2 to 4 days a week you still have to go into the office. And for most of us that have to go into the office 2 to 4 days a week, we're not going to live in Boise and fly to San Francisco or San Jose 1 or 2 days a week to do that. We're going to live close to where our work is. So I don't think this is going to result in a mass exodus from the Bay Area because people can work remotely, and we're going to have these fragmented workforces. And I will just say lastly, and people seem to forget this, there's a lot of reasons that people like living in the Bay Area besides it just happens to be close to the office. We have fantastic weather, great things to do, great culture. I mean, you all live here, I could go on and on, but you all know this. This is still going to be a place that attracts a lot of people to live here. Yes, for the career opportunities and economic opportunities, but also because it's just a great place to live. Cost of living aside, it's, people like living here. Now, the last thing I want to touch on here is the inventory shortage. And this is, like I said, perhaps less of a myth than let's really understand what's going on. And I say this because technically there's an inventory shortage. But it's not, when people say that, yeah, there's an inventory shortage, there's just not enough houses being sold. That's what everybody says. And the reality is houses are being sold at the same rate that they have been for a number of years. And that's actually, if you look at the chart on the left, that's the new listings coming on market. The bars are 2019, the line is 2020. And in fact, in 2020, there were more properties brought to market in these 5 counties than there were in 2019. What's changed is the velocity of the market, and that's the right chart. The time it takes to sell a property from the day it comes to the market to the day it goes into contract is down on average about 25% across the board, which essentially just means that when a house comes on the market, it gets sold. We can't keep them on the shelves. We can't make them fast enough. We have a demand issue, not a supply issue. And it's, does that change the fact that when a house comes on the market, it is now getting, 10, 15, 20 offers? No, it doesn't, but it's just important to understand what it is when people say there's not enough houses being sold. I don't see anything that is suddenly going to cause a 5, 10, 15% increase in the number of houses coming on the market. If that were to happen, we would absolutely see, prices flatten out and possibly even fall. I just don't see anything that's going to cause that to happen. I will say on this is interesting, just as a side note, what's been going on in 2021, the first couple of months of 2021, there are a number of markets where I work in particular, and I know in a lot of the areas in the East Bay, houses are not selling in 20 to 25 days, they're selling in 3 to 5 days, sometimes even 1 day. It's not 100%, it's not across the board, but there has just been a massive wave of buyers come onto the market in the last month, and definitely not enough homes on the market to meet that. So you're seeing really intense competition like we haven't seen for a couple of years. Okay, so I want to take a minute and talk about how the industry has changed, how the industry has been changed by the pandemic and the way we buy and sell. First, while I do this, I want to throw up one last poll here. Get people's opinions on this. Let me pull this up. So I'm going to launch this poll, if you guys wouldn't mind doing that one while I talk about this for a second. Long-term trends have radically accelerated and there's no turning back. So it's probably no surprise to most of you that real estate is historically just a very antiquated industry and has been dragged kicking and screaming into the 21st century. It's been evolving slowly. The pandemic has just blown everything wide open. And the most obvious thing is technology. There's just been a huge surge in technology brought into the industry and the way we do things. I personally, I love it. A lot of people complain. I like technology. I come from tech industries, so I embrace it. There's been a lot of resistance, but it's here. There's just no resisting it any longer, and it's just a pervasive part of the way we do things now in the business. What I think is almost more material, though, is, for example, the physical processes, the physical aspects of the way we buy and sell real estate has changed, or I'd say been deprioritized. And what I mean by that is, for example, open houses. I haven't done an open house in over a year. And they will come back when the pandemic opens up and we're allowed to do them again. You will see open houses again, but they're never going to have the same importance, the same weight in the process that they did in the past. And today, when somebody goes to look at a house they're thinking about buying, by the time they physically go out, make an appointment, physically go out and tour that home, I call that the second, third, or even fourth visit, because they've looked at the pictures online. We all do that. Everybody likes real estate porn, so everybody goes out and looks at pictures online. You've looked at video tours. They've probably done these virtual walking tours, these Matterports. Some of you may have seen these, where you can, with your mouse or your trackpad, you can walk yourself through a home, look around 360 degrees, really get a feel for how the rooms flow, how you flow through the house, what it looks like from different parts. Even outside the house, you can walk around, and you can do all that virtually today. So by the time you go, it's kind of a last step. And that's a pretty dramatic shift from the way things were done even just a little bit more than a year ago. And that's going to continue, and we're going to see more and more things going that way. One of the things that seems to be the sort of logical extrapolation of that, of what I'm saying, is people just buying houses without ever stepping foot in them, just buying them sight unseen. And in fact, we are seeing that. It's not huge yet, but we are seeing that. Personally, I think it's a terrible idea. Houses are, I know it's trite to say, this is the biggest transaction you'll ever do. But the reality is, for 99% of the population, this is by far the biggest transaction people will ever do, the biggest part of your financial picture. And there's a lot of risk. There's financial risk, there's legal risk, there's personal risk. And in most cases, I think buying a house sight unseen is not a great idea. But we're seeing it. We're seeing it more and more with millennials, and I suspect as the younger generation who've grown up digital natives start to come into the housing market in force, we're probably going to see more of it. I'll prophesize right here, mark my word, that if it becomes a significant part of real estate transaction, it's going to end up resulting in a lot of problems and lawsuits, which is why I'm not a big fan of it. But if it happens, it happens. All right, let's take a quick look at the poll here. Curious to see what people think. Do you think it's a good time to buy? 55% of the people said yes. That's impressive. That's much higher than I would have expected. 75% of the people think it's a good time to sell. That's less surprising, but a pretty significant number. And I think what will be interesting is, let's see if California agrees with you. So CAR, the California Association of Realtors, every month for years, they do this consumer survey where they ask these two questions. And these are the results. So now this is California-wide, not just the Bay Area. And so I will share with you, I did one of these talks not too long ago with another group, and I asked the same question. And interestingly, got very similar results to what we're seeing here today from the group on the call. And significantly higher than what you see across California. Pretty consistently, sort of low to mid 20s, people across California have been saying it's a good time to buy. You see that uptick, right? If you go back to the gray area in the middle, the light gray, sort of March, through May of 2020, there was this exuberance. It wasn't huge, but I even remember the conversations with people who had been buyers saying, "No, I'm going to hold off because I'm going to wait for prices to come down. Then I'm going to step into the market and buy my house." Most of those people regret that decision right now, but there was a lot of that going on. And you see that reflected in the chart there on the left. The right, of course, tells its own story. When the pandemic hit, people, oh my God, the sky is falling. It's a terrible time to sell. That didn't last very long, and now we're sort of right back to where we were, and even a little ahead. So that's very interesting. Thank you for participating in that. Well, that is pretty much it for my prepared comments. I want to take a quick minute here and give you my perspective of what's to come, my little crystal ball, if you will. And a lot of this, quite honestly, depends on the trajectory of the pandemic. If the pandemic continues to wane, if it continues to go in the right direction, and we start to get to that point where we're opening up economically again safely, people feel comfortable, I think what we're going to see, significant competition for available homes is going to continue. I'm predicting price average, median price increases in the 5 to 8% range this year. I will fully admit that is actually higher than most economists are predicting. Now, granted, most economists are predicting on a broader geographical area than just the Bay Area, but this is what I think is going to happen in the Bay Area. I think we're looking at probably 5 to 8% overall. And San Francisco may be a bit of an outlier again, but for the most part, I think that's what we're looking at. I think we're going to see a rational return of condo sales. Now, again, when I say that, that's sort of the high density living, not just San Francisco, but everywhere, that was a little bit off. You're going to see stabilizing rents in San Francisco. I think they've kind of hit bottom. They're down, 30 plus or minus % in the past year. And then seasonality, and that's really, I believe, pandemic dependent. So typically, we are right now entering like the peak spring selling season, the peak seasonal season for real estate every year, and it definitely trails off in the summer. It didn't last year, of course, because the spring season just shifted out. But in a normal year, the summer, when you get into sort of late May, June, July, August, the summer gets slower, not slow, but slower. If people feel, if we get to the point where people feel like they can travel again, we've got the pandemic comfortably under control, where people feel like they can leave, they can take these trips. There's so much pent up demand for that. If that happens, I suspect we're going to see a softening in the summer. If we don't get to that point where people either can't or don't feel comfortable taking trips, en masse, I think, the spring competition is going to roll right through the summer and beyond. As long as we're home, we're here and not, back to our normal lives, I think this sort of drive in the real estate market is going to continue. Longer term, the only thing that has me really concerned about Bay Area, anywhere, but since we're here, Bay Area real estate, is rising rates will, flatten appreciation, put a damper on demand. And when I say rising rates, I really think for it to make a difference, we're going to be looking at, 5+% rates, which ironically is historically still very low, but compared to 2.5% and 3%, it's going to feel very high. And given how much prices have appreciated in the last couple of years, it's going to feel very high. And it is going to happen. I will be fully transparent. I have been predicting that rates are going to rise for at least the past 3 years. And I'm going to stick to that prediction because one of these days I'm going to be right. So I'm just going to hold to it, and I know I'm going to be right. But that's my only real concern. Prop 19, I'll just touch on that. It's a proposition that passed last year. And essentially, without going into too much detail, what it did is it allowed people over 55 to sell their homes and buy another home anywhere in California. And essentially, with some minor caveats, essentially keep their property tax basis. So you've got a lot of people who, older people who've been living in their homes for, 20, 30, 40 years. And, their kids have moved on, they're empty nesters, they don't need these big homes anymore. They maybe want to downsize, but that property tax hit that they would take because of the way our property taxes are done in California, they just don't want to absorb that. So they stay in their homes. And then those homes, they're not coming to market. Homes aren't turning, which, adds to the inventory problem. This was passed in the hopes that it would loosen up some of that inventory and some of those properties will come on the market. We'll see. It just went into effect last month. It also had an impact on the way people inherit properties. So some inherited properties are probably going to be coming on the market that otherwise would be kept, but it still remains to be seen whether it's going to, be in large enough numbers to have a material impact. So that is it for me for now. We are going to do Q&A, but I think Jeanette, we wanted to do.
Yeah, we have a. Let's do. We have a couple questions in the chat.
Okay.
So let's grab one of those from Rajesh. Have you seen any trends on first-time house buyers versus people looking to upgrade, get more space? Is one group buying more than the other?
That's a great question. I don't have any data on that. I can speak anecdotally to it. I feel like in my own practice, there's been a lot of first-time home buyers coming into the market. I think a lot of that has to do with the low interest rates, because with those low interest rates, it makes housing a little bit more accessible. I will stop short of saying my anecdotal experience can be, extrapolated to the entire market. I don't know if it's more would be interesting. A lot of times, mortgage data is a good place to look at that. So I'll see if I can pull some of that up and get you an answer on that.
Cool. We have another question from Brian. Don't you think there will be a leveling of home prices, particularly at the entry level? On the peninsula, an entry level starter home at 1.5 seems unsustainable.
In theory, I agree. I agree completely. And yes, at some point there will be a leveling. I thought there would be already. Right now, as we are speaking today, and this has caught me and I think a lot of my colleagues by surprise, we're actually seeing a leveling up of a significant leveling up of prices in the market right now. I can tell you that just in the last month and a half, whereas a year and a half ago, we would see anywhere from 1 to 3 offers on a house, and houses going for, maybe 2, 3, 4% over asking for the most part. Suddenly we are seeing 10, 15, 20 plus offers on a house, and 10, 15% over asking. It kind of feels insane. And I will tell you right now, it's very hard to be a buyer in a lot of markets. And I've got a number of my buyer clients that are struggling to make offers, and they're losing because there's so many. And this is at those price points. And sort of putting that together with the previous question, there are a lot more people, I think, that can enter the market and look at that 1.5 plus or minus price point than there are people at the $3, $4, $5 million price point. And when you look at the ultra luxury market, that $3, $5 plus million price point, you don't see them trading way over asking price. On average, you probably see them trading 1% to 2% under asking price, because people that have millions of dollars to spend sort of come in and negotiate a little bit. But at the entry level price point, you just see a lot more competition. There will be a leveling at some point. The affordability index in the Bay Area is at a pretty close to an all-time low right now. I haven't looked at it in the last couple of weeks, but it's hovering in the 12 to 13% range, I believe, which is about as low as it ever really gets here. And essentially what that means is, maybe 12 to 13% of the households can afford the median priced home. And you wonder, it's like, well, if only 12% of the households can afford your median priced home, how is it that there's so much demand? And the answer is that there is. That 12, 13% is just, well, actually, maybe the numbers jumped up a little bit because of interest rates. If interest rates go up, you're going to see that affordability come down. But I know this is a long-winded answer. the short answer is yes, there should be, but so far we haven't seen it.
Rob, we have a couple more questions in the chat, but I'm wondering, do we want to get to one piece of trivia and then come back to the questions? Also, if anyone online wants to hop out and ask their question live after our trivia and show your face, you know, we're always happy to do so. But yeah, let's try to get to let's try to get some people some prizes.
I'll tell you what, let's do this. I'm gonna pull up the first trivia question, and people can answer that. If you want, while people are answering that, you can ask a question, and then we'll look at the results. How's that?
Perfect.
Okay, what did I just do here? Okay, are we up?
You're up.
All right, we're up. Who was the original Amazon of home sales 80 years before Amazon existed? All right.
This is good. We hosted a trivia event last week. We should have brought our Jeopardy music over.
Exactly.
And for awareness, the winner of this prize is going to get a $50 gift certificate to the Table in San Jose. If you guys aren't familiar with the Table, locally sourced ingredients make for delicious, creative, new American fare. And they have a nice outdoor patio.
All right. Well, voting seems to have stopped, so well, got a few more coming in. I'll give it another second here.
All right.
Let people, don't want to take it down too quickly. We'll give it about, tell you what, we'll give it 5 more seconds. And 3, 2, 1, and polling closed. Let's see what we got. And we got a good crowd here. The answer is Sears. So the Sears and Roebuck catalog, which sells clothes and housewares and everything else, actually sold houses. And from 1908 to 1944, I think it was, they sold about 70,000 homes across the United States, mostly in the Midwest and the South. And these were nice homes. They sold them all styles, all architectural styles. You know, they were built with very high, high quality build, high quality materials, probably a lot nicer than some of the houses that are built today. And a lot of those are still in existence, but they can be kind of hard to find because apparently Sears lost all their records of their homes. And so there are some telltale signs, I guess, but hard necessarily to identify. But yeah, the catalog home started in 1908.
Great. Can you, on your side of the poll, can you see?
I cannot, but there's got to be a way. I'll figure it out.
I think it's like one of those things where we're gonna, ask people to be, like we had 9 people who got Sears.
Yeah, we're having a bit of a technical thing here, but we'll figure it out. Tell you what, before I pull up the next one, do you have another question that you wanna go to, or?
Yeah. Let me hop in the chat and see our last question. I think we had Brian. Let's see. It looks like Tina had a question. Tina's question was, with digitalization, what do you think is the value add in the future of traditional agents versus going with an online agent service such as Redfin that charges 1% versus the traditional 6%? Are these online agents, quote unquote, safe?
I love this question. I get this question all the time. Are they safe? Yeah, they're safe. In a technical sense, yes, they're safe. They're licensed. They're theoretically trained. Well, here's the thing. 20 years ago, the value of an agent was frequently proprietary information, right? If you wanted to know what was for sale, you had to go to an agent because there were just giant books that were printed every week and sent to all the brokerages, and that was the MLS, right? There was no other way to look for it. As an agent, if that's the only value you bring today, there's really no value. The reality is there to really help somebody either buying or selling a home. You can get somebody very cheaply to step through the mechanics of it. But if you want to get the best possible deal and be truly safe, meaning you're financially protected, you're legally protected, these are very complex transactions. I don't know, like how many of you have actually been through a home sale or a home purchase? Recently, you'll realize that the stack of paper that you were given, the disclosures, I mean, there are hundreds and hundreds of documents that you're handed that you have to sign that frankly you're supposed to read, and very few people do, but you really should. I will tell you, I've read all of them. I know all of the contracts. I know all of the disclosures. I know what those clauses means, and I know how to protect you. I don't want to badmouth my competition. The Redfins of the world, the Reallys of the world, they actually serve a segment of the market that is extremely cost conscious. And I don't mean this pejoratively at all, but if you think about the retail world, you've got the Walmarts of the world, and you've got the Neiman Marcuses of the world. And they both serve a different segment for a different reason. And this goes to all disruptors, whether it's the Redfins or the Open Doors with the iBuyers and all this. I think they serve a great purpose in that they're addressing a market segment that as a full service realtor, we don't serve very well. But we serve a different segment of the market very well. And when you're dealing with a multi-million-dollar transaction, personally, I would want somebody who is a highly trained professional to walk me through that and make sure that I am safe. They know the neighborhood, they know what to look for, they know how to read reports. Have you ever read a pest report? Have you ever read a home inspection? Have you ever read a title report? People think of these as just, you know what, they're just steps you have to go through. I get these reports, I have to sign here. There are problems with all of these. And if you buy your average entry-level home at $1.5 million and discover that you overlooked a title problem, or you overlooked a problem on the inspection reports, or some sort of red flag that you should have looked at, you potentially have a problem now that's worth tens of thousands or hundreds of thousands of dollars. I personally don't feel that the online brokerages do a good job of protecting you in those situations. They're simply not, they're volume brokerages, right? Push through a lot of volume at a low cost. There's only one way to do that and make money, and that's to reduce the service levels. So I don't know if that really answers your question. In short, I have absolutely no concerns that my job is in jeopardy because of the rise of, Redfins or Zillows or Reallys of the world. I welcome them into the mix. I feel like the people that I serve and the value my service and that of my colleagues, I'm not concerned about it.
All right, Rob, thank you for that answer. We have another great board member online who's doing random number generation to sort of decide who won. So Chris, if you're out there and online, if you want to, and you live in the Bay Area, if you want to message me and give me your email, we can get you that gift certificate, and we will do the same for the additional 2 prizes. So we can still trivia, but we've got some science behind the scenes.
All right, cool. Let's do the next trivia. We've got a couple more, so I'm gonna get this one up. What is the largest land sale in U.S. history? We've got some choices. Good. I'll watch the clock on this and we'll give it a minute. So we're at 20 seconds now. How's that?
Great. And then, we could also just have people answer in the chat so we could see their answers.
Yeah, I apologize.
If
Somewhere
people
in
want to
here,
do
I think
that.
there's a way to see the answers on that.
And then while in the world of multitasking, let me make sure that I've gotten to another question while we're waiting. Do you know of any resources or have advice for people who are from lower income families looking at buying homes with older family members?
With older yeah, absolutely. There's, the best people to talk to about that is a really good mortgage lender. There are, depending on where you live, there are a lot of, God, what do you call them? It's been a long time. I apologize. Many years ago was in the lending industry. There's a lot of like down payment assistance and mortgage assistance programs for people. And they vary. There's actually just tons and tons of programs out there. Some of them are very local. Some of them are statewide. Some of them are county. Some of them are municipal level. So the best thing to do is to talk to a really good mortgage advisor on that. And, if anybody's interested, I know a number of them. You can reach out to me offline, and I'm more than happy to make some referrals to good mortgage lenders who could help with those types of programs.
Great. And I'm getting a couple people chatting me the answer. If you want to
yeah, I'm going to
drop your chat publicly into not to me, but to everybody.
So this one was maybe a little too easy. Of course, it was the Louisiana Purchase. And the Louisiana Purchase was, I've got my little notes here, 828,000 square miles. It was not, however, the cheapest purchase. So we got the Louisiana Purchase from France, from Napoleon, at about 2.8 cents per acre. Alaska, we paid a lot less for. So Louisiana Purchase was $15 million. Alaska, we got from Russia in 1867 for $7.5 million, but that was only 2 cents an acre. So not the biggest, but the cheapest.
Okay, great. And it looks like Lisa got that answer. So Lisa, if you want to Slack me privately, your email address, okay, we can get that to you.
Right,
okay.
One more for
One more. And then just for perspective, Chris, or Chris is chatting with Rob, we're talking about sort of the finer things in life. So I tried to pick a couple restaurants. So Chris in the chat just won the gift certificate to the table. Lisa has just won the gift certificate to Luna Mexican Kitchen in San Jose. If you guys haven't been there, it's really good. And they actually won a Bib Gourmand designation from the Michelin Guide 2 years ago.
Excellent. So nice. All right, well, let's do this last one then. Who is the largest landowner in the world?
And while we wait, Lisa did have a little bit of perspective for you, Rob. In the chat, she said she's also learned that having a real estate agent who has a good relationship with local contractors, electrical, general contractors is helpful and something that online companies do not offer.
That's actually, I'm glad you brought that up. One of the things that I think people don't realize about what we do is it's not just about a transaction. It's not just about buying and selling a home. I help people with that kind of stuff all the time. And when you think about it, every time I work with somebody to sell a home, we prep it. So those relationships with those contractors is huge, but it actually doesn't even stop there. I mean, I work with so many people, my colleagues, we work with so many people. pretty much anything. I mean, it could be a babysitter, frankly, or a dog walker. I mean, we have so many connections in the community that we end up being a resource for all of those things. And it's just, it's part of what we do. But yeah, I appreciate you saying that. That's important. It's the personal relationships. And, you know, I actually say this to people a lot. They ask me about my business, and it's true. I generate revenue on transactions, but, you know, we build our business on relationships. Whereas the big houses, you're right, the big online, they're purely transactional. Just by nature, they have to be. And again, nothing wrong with that for the people that it works for, but that is the difference. All right, we got all the answers?
Looks like we got some answers into the chat.
All right.
What do we
Well,
got?
again, this is pretty evenly split, but I think in terms of percentages, the bulk of people got it right. It is, in fact, a Catholic church by a huge, huge margin. It is 177, I'm trying to remember the statistics that I had, 177 million acres, I believe, that the Catholic Church owns worldwide, which is larger than the entire country of France. There's really just nothing else that even comes close to that level of land ownership worldwide. So, good job.
Great, and it looks like the first person to get the answer into the chat is Jennifer Flocks. Jennifer, so if you want to privately message me your email, or if you registered, I can actually just grab it from there. And I will say the winner of this $50 gift certificate is to B Steak in the Prune Yard. The Mercury News just voted it one of the Bay Area's top 13 new restaurants to open this year, supposed to open last year. And so they're from the same owner of Orchard City Kitchen, Jeffrey Stout, who has a number of restaurants, and they do have an outdoor patio now open in the Prune Yard.
Nice. Congratulations. I'm going to stop sharing my screen. I know we only had 3 prizes. I've got a 4th question just for fun, and I know we're out of time too, but if people don't mind, I'm going to throw this up. I'd just be curious if people want to. This one's just for fun, guys. Sorry. I don't know that I can get Jeanette to be any more incredibly generous than she's already been. But, well, while you're taking a look at this, I know we're out of time. People can sort of jump out there and answer questions. The answer is actually $100 million. It was Yuri Milner, who's a Russian billionaire and an early investor in Facebook and Twitter and a number of other companies, bought a Los Altos Hills home in 2011 for $100 million, which has now been assessed at $57 million. So on paper, he's taken a pretty brutal loss. He was also, just side note, a business school classmate of mine, but I did not get that sale. Anyway, thank you very much, everybody. I really, Jeanette, appreciate you having me on, and I appreciate, again, everybody taking some time on their Wednesday evening for this. And if anybody has any questions or wants, you know, resources or referrals, feel free to reach out to me.
Okay, great, Rob. Thank you so much for taking the time to help us sort of get smart on what's happening. You know, we really appreciate that. And again, I would be remiss if I did not say we're always looking for great volunteers on the Silicon Valley board. And we've got 2 great events coming up. Next week on Friday, March 12th, we have a crypto happy hour at noon. And then on Friday, March 19th, we've got insider secrets to nail the job hunt also at noon. So if you guys aren't getting our newsletter, check it out. Thanks, everyone.
Thank you.
Okay, Rob, I know you're not looking at the chat, but you're getting a lot of thank yous in the chat.
Thank you, everybody. I really appreciate it.
So
I actually just realized something, though, and whoever's still on, I'm going to apologize. I'm going to apologize to you, Jeanette. I forgot to record this.
I recorded.
Oh, you did. You're awesome.
Want you to know. Want you to know. I figured it was going to be easier for me to do it on this side than stop your flow. So I didn't get I didn't get your bio, but I got everything after that.
Good. Awesome. Thanks very much.
Cool. All right, Rob, keep in touch.
Thank you. Appreciate it, everybody. Bye.
Bye.